Hey y'all, what's up? It's your girl Credit Queen 323 of America's Tax Services and Credit Repair. And today's topic is straight out of my DMs. This topic, I've been getting tons of questions in the DM because it goes down in the DMs about what is dropping my credit score when I'm paying my bills on time. First things first, let's see. How are you guys checking your credit score? Are you simply relying on Credit Karma? And if so, the reason that I ask this is because Credit Karma uses what you call a Vantage credit scoring module. So with this particular scoring module, this is where it's like more of an educational type scoring module. It's a lot cheaper than an actual FICA credit scoring module. FICA is what's used to rate you and get you approved for over 90% of the loans that you're going to be applying for. So if Credit Karma is using a Vantage credit score to give you a credit score rating, it's inaccurate because the FICO credit score is what they're going to be using, which is the Fair Isaac Corporation. That's what 90% of the bureaus use to approve you and do the underwriting for. So your credit score ranges from a 300 to a 850. So that's 550 points that you have to play with. And out of those 550 points you have to manage, there's 5 categories that's going to fit that particular average of score that you're going to be applying for. So if Credit Karma is using a Vantage credit score to give you a credit score rating, it's inaccurate because the FICO credit score is what they're going to be using, which is the Fair Isaac Corporation. That's what 90% of the bureaus use to approve you and do the underwriting for. So your credit score ranges from a 300 to a 850. So that's 550 points that you have to play with. And out of those 550 points you have to manage, there's 5 categories that's going to fit that particular average of score. So the very first category is payment history. That's the largest category, coming in at 35% of your credit score. That's 550 points that we have to play with. Out of 35% of that, that's 192.5 points. Now, in this category, this is where they're going to weigh you on if you're paying on time, if you have any derogatory items, if you have anything in collections, things like this. This accounts for 35% of your credit score. Now, how many times have you heard people constantly tell you, oh, all you need to do is get a credit card and pay it on time and your credit score is going to be fine, it's going to shoot up? I remember hearing that before I was even the credit queen. As a little kid, I remember hearing adults in the living room saying, just go out, get you a credit card and pay it on time. Go out, get gas and pay it on time. And your credit score, you're going to have great credit. Well, that brings me into the next category. This category accounts for 165 points. That's 30% of that 550 points that you have to work with. This category is credit card utilization, which simply means how are you using your credit cards? Are you maxing them out? Are you spending over the credit limits? Are you being modest and mindful? So look at it like at this. This is how you can determine if your credit card utilization will be high. Credit card utilization, they tend to want to see you operate at a 30% utilization. So look at it like this. If you have a $300 credit card and you use $210 of that credit card, you're now operating at a 70% utilization. I've seen people with credit scores in the 800s drop to 500 by simply maxing out a credit card. So this is one of the fastest ways to tank your credit score, but it's also the fastest way to boost your credit score because by simply paying off that high balance, it will increase your credit score by the next billing statement. Now, the next category is age of credit. This accounts for 15% of your credit score, which averages out to be about 82.5 points that you can gain within this category. Now, what credit age means? Are you a baby in this credit game? Or are you a full-grown woman in this credit game? Now, is your oldest credit account, which is like your oldest credit card, is it 6 months old, That's a baby. Or is it 20 years old, a full-grown woman? So the older the credit account, the better. Because I like to look at it like this. They feel as if any particular person can have one good year of paying their bills on time. But when you've paid all of your bills on time for 20 plus years, no excursions, on time, that is phenomenal. That means nothing can stop you. The corona itself can come knocking on your door and you're going to make that payment on time. And when you have a history like that, who's going to deny you? So what I would like to advise when it comes to this is that be careful of opening up new accounts, because let's take that same 20-year-old account. If you go out and you open 4 new accounts, that's going to average out that 20 years. Now your average credit age will be 4 years opposed to 20 years by simply opening up new accounts. Now this brings me to the last two categories, which are the lowest. They're tied at 10% each, which is only 55 points of our credit score. So this one I want to talk about now is inquiries. Now the inquiries simply stay on your credit report for 2 years. However, you recover and rebound from those points that you lost within 6 months. So that just basically means that after 6 months, you regain those points that you initially lost. But the inquiry will stay on your credit report for 2 years, just to give lenders the opportunity to see what you've been doing. Because the credit score was designed by the Fair Isaac Corporation simply to determine how likely you are to default on a loan. So when you look at this category, inquiries, what the underwriters are doing is they're looking to see what you've been doing. They're looking to see where you've been shopping. So for example, if you went out to say Citibank and you got a loan with the 850 credit score, they can assume that you got a very high limit loan. So for just sake of argument, let's say that was an $80,000 loan. Now you go to, let's say, Bank of America to get a loan. What is that same 850 credit score? They can't determine and rate you based off of that information, because now your debt to ratio is higher. Now you have an $80,000 loan they don't know of just yet because it hasn't showed up on your credit report, but they're left to assume, well, how much debt do they now have? Will they be able to pay my bills as well? So you know what? I'm going to hold off and not take that risk just yet. So that's why sometimes you may receive letters in the mail that say you've been denied due to too many inquiries on your credit report. But don't worry, because it's one of the lowest credit scoring categories. Now, on to our final category, which is another 10% category. This is your credit mix. This is the type of credits that you have. This is important because they want to see how well you handle multiple obligations and responsibilities. So a good credit mix to have is, we recommend you have about 2 revolving accounts, which is simply credit cards. Revolving because it's ongoing. That's why it's called revolving. Whether you pay it off or not, it's going to stay open. As long as you treat it good, it will treat you good. The second type of account to have is an installment loan. This is simply an end date. This is like they give you a loan for an amount. Then once you pay that loan off, it's closed out. This is something like a car note, a 5-year car note. After you pay it off for 5 years, the agreement is now over. A mortgage, 30 years, you pay the house off, it's yours, it's over. The third type of account to have is an open-end line of credit. This is my clients in the Palace, they like to call it the black card. This is where you have no credit limit. You can spend as much as you want on this credit card, but you have to pay it off in 30 days. We, as the professionals at ATS, recommend that you have at least 2 installments accounts, 1 promissory account. Now, let's recap. First category is derogatory remarks, late payments. This is called payment history. That accounts for 35% of your credit score. That's 192.5 points that you can gain from that category. Category number 2, credit card utilization. Are you maxing out your credit card, or are you staying under 30% credit card utilization. We at ATS like to recommend that you stay under 10% credit card utilization to maximize that category. Third category, age of history. That accounts for 15% of your credit score, which is 82.5 points. This is, are you a baby in the game? Are you a full grown-up in the game? The last two categories, both 10%, 55 points. Credit inquiries, where you've been shopping, and types of credit mix. Have 3 accounts that we recommend for you guys. That's the loan, open end, and a credit card. And did you know that the credit bureaus have over 300 criterias that they have to adhere to report something negatively on your credit report? And we as professionals know the laws that they have to abide by, which is the Fair Credit Reporting Act and the Fair Debt. They have to make sure that they're reporting these items accurately and consistently on all 3 credit reports. They also must be able to provide proof, which is a signed document stating that this account belongs to you. Now, the banks don't supply this information. So as credit specialists, we're here to take care of that for you while you sit back, relax, and use our tools that we have in place to help build your credit history while we dispute and challenge the negative items that's holding you back. Don't worry if you didn't know. It's not your job to know, it's mine. That's why I'm here to help you. So I hope that helped you a lot in helping you to understand how you're losing points when it comes to your credit score. If you need help, ATS, myself, is always here to help you. You know where to find me. You know how to reach out to me. I'm here to serve you. Keep those questions rolling in the palace. I look forward to hearing from you guys and answering more questions. Bye.